Well, welcome to We Are CC, episode 33. I am joined by Jay Winterm, config_JSON, Jared Woodard, and Mr. Mister. Hey, gentlemen, how are you feeling this week?
Pretty fantastic.
Good.
Howdy.
Happy Monday, guys.
Happy Monday. 1 week closer to Halloween. I'm pretty pumped. And I got the house decorated, got the candy, so I can keep the kids from smashing my pumpkins on Halloween night.
What kind of candy do you do?
We just do like a mix. But the one thing we don't do is candy corn. That
Fair.
stuff's just awful.
That
If
is
you
very
like
fair and
that,
kind.
if any of you like candy corn, just get off the podcast now. I don't want to talk to you. Yeah, so let's start the week off as we always do. We'll talk a little bit about the macro, talk a little bit about Bitcoin and Ethereum. So on the macro front, honestly, I know we've had a little bit of downside here. It seems like we're getting to that part of the bear cycle where the apathy starts to set in, where the charts aren't terribly exciting, where the news is kind of subdued, or even sometimes a little bit depressing, right? Do you guys kind of feel that? Like, is that apathy kind of nipping at you a little bit?
I mean, yeah, it's a little bit of it's like when you don't expect it to hit, and it does, like the bad cycle, the bad economy. But when you get used to it, and this is just like part of like biology, in bad times or good times, eventually you just get used to it and you adapt. And I think that's kind of where we're at.
I've been seeing a lot of traders. Actually, I think it's config. I saw you, maybe it was like over the weekend, you tweeted something about like, hey, this range is boring, or I'm just not interested in trading right now. I mean, for someone that's like an active trader, I mean, what do you want to see? Just more volatility? You want to see a big move in a direction, or what? Like, we've been stuck in this, basically we've been stuck in this range.
Move, but small, I mean, even if it's smaller move, but up and down, just give that price action, even if it's not a straight down to 15K or anything.
Yeah,
like
straight down to 15K would be terrifying from here.
Yeah.
It's easy to forget too, when we're at something like 19K, a move to 15K is a very sizable move. I mean, what is that? 25, a little under, I guess, like 23%.
Yeah, something like that.
Yeah, that's a lot. I mean, people are looking for 10K, that's almost 50%. You're going to have Bitcoin's market cap, which isn't, I don't remember when I looked, maybe it's like, is it like 160 billion or something? I mean, we're pretty low already.
Let me just check it right now.
Yeah, I was looking earlier because I saw some Bored Apes talking about ApeCoin, and they said, they're just speculating for fun, but they're like, yeah, ApeCoin to $500 by 2025, which
Bitcoin. Bitcoin's at
Yeah.
368 billion.
Okay, that's it. Yep. If ApeCoin today was to hit $500, it would be neck and neck with Ethereum and about half of Bitcoin. So kind of unrealistic. There's just no liquidity for that.
It's
but in a
like
few years, maybe.
UNC $1 believers.
Yeah, that's like XRP to $5.12 or whatever.
Oh, that's the only one I've seen. XRP like triple digit for predictions that are completely...
Oh, maybe, I don't know. That was like the 2017 meme.
Oh, yeah. That's a lesson to be learned. I mean, it's not the only thing that matters, but always looking at the total supply of a token or coin versus its price will give you kind of an indication of how realistic targets are. And that's a big folly of many new traders, is I see them buy into these ridiculous predictions that like would require the entire planet to buy, every single person to spend all the money they have to even get near that target, which obviously isn't going to happen. So let's move into our topics. I posted them into Reddit. PayPal, even though I know it's technically not crypto, but it is also, because it was one of the early Web 2 financial services to introduce support for Bitcoin, Ethereum, I think Litecoin and some others, just absolutely got murdered on the open today after... I don't know if you guys saw this, after they posted something that they said it wasn't supposed to be in their terms of service, but it was like, if you say something that we don't agree with, we can deduct up to $2,500 from your account, like without your permission.
Oh yeah, and this was amazing marketing for crypto. If you need like a free advertisement, this was wonderful. I canceled my account a while ago because I was tired of them.
Yeah, I haven't enjoyed PayPal for a long time, but that I mean, it blew my mind when I read that. I just couldn't imagine how and why, and who would say, "Hey, this is a good idea. Let's put this in our terms of service." Because
yeah, it's like these days you come across so many things like how on earth did this get passed out? Like how did this get out there in the wild?
yeah, they should fire their lawyers. I mean, that doesn't even pass common sense check, but it does illustrate some of the advantages, some of the positives about crypto, which is that censorship resistance that we have in a lot of projects, and just kind of a fundamental aspect of blockchain technology and decentralization. But on the other hand, it just absolutely blew my mind. You know what I love since 2020? Since a lot more people have got into investing and a lot more people understand at least the fundamentals of like longing and shorting, in how better understanding too of how stocks are representative of a business and their capital. I saw a lot of comments like, "Hey, short PayPal on the market open," like just dozens and dozens of comments. And in a way that does give some power to the consumer, right? I mean, you're obviously complaining on social media might get their attention, but a lot of people shorting their stock will definitely do it.
Yeah, PayPal is down about 6% today. So if you short it at the open, although I think it kind of happened right at the open as well. So you would have had to been fast to make you could have made some money if you shorted before 9:45 or so for sure.
Yeah.
I mean, it's already down from 300. So
that too. Yeah. This weekend I told myself, I saw all the news and drama and I was like, yeah, I need to short. I need to get, I barely touch my stockbroker account. I really don't do much with stocks. So I was too lazy, but yeah, that was basically free money. If you guys pay attention to the news, sometimes you see those kind of just news headlines that are just basically free money. And that was definitely one of them. And let me see, scrolling where
I'm waiting for a stock market with crypto backed assets so that I can move them on my terms, not waiting for the market.
Yeah, 24/7 stock market. That would be nice.
I thought I heard rumors about that.
FTX is introducing that to some extent. Like you can trade certain stocks
I think
as some tokenized. Yeah, maybe DXY as well, but I think like you can trade Tesla or some derivative of Tesla stock that you're able to trade 24 hours a day on FTX, I believe.
Is it functionally a bearer asset? Like, it can't be taken away from me?
I'm not sure if you can remove it from their platform, to be honest. I don't know. I don't know exactly how it works. I don't use FTX. Yeah. But at least you get 24-hour market.
No, that's fair. That is an improvement. Step in the right direction.
Yeah, maybe we should research that because I remember seeing something about that last year, and I thought some people were experimenting with it. Then I thought some regulators were like, whoa, what are you doing? And then I didn't really see anything about it again. And yeah, maybe there's more of that out there. But
Binance also had stock tokens. I remember buying Tesla like 500 pre-split.
Yeah, I mean, in this day and age, do you think they would consider moving the markets to 24 hours? But I don't know. Maybe the banks or the big funds don't want to do that for some reason. So
it's a lot easier to kind of control and play with things when you've got this gray period you can coordinate.
True. Yes, a lot of shady stuff does happen after hours. You're right. So that is definitely giving them an advantage. So this was a big headline from the past. There's a lot of big headlines, but this one was probably the biggest. So we knew that Celsius had leaked or shared, and then got leaked. Basically, a lot of information, like over 10,000 pages of information on all the users that were impacted by Celsius, is probably out there somewhere, in the internet that can be downloaded. And so if you were a Celsius customer user, your information is probably included in that. And there may be some personally identifiable information, right, for your account that goes with that. if you were one of those types of folks, and if you had an email associated with Celsius or anything else, or even wallets that may have transacted with them, you may want to change those just to be safe. Were any of you guys with Celsius?
Lucky I never got to make an account.
Yeah, I never touched it. I remember being on some shows in early 2021. So this is kind of vindication, because I remember people like bringing it up and pumping it then. I was looking at 22% returns, ballpark, this kind of stuff. I looked into the history of the guy that started it. And that's, to me, like, this is as much as I can give financial advice. Actually research and Google the people behind these things, their names and their histories and business and things like that. Like, that's just always a good rule of thumb. And I looked at that and I was like, too risky for my taste. No, thank you.
Yeah. Well, I think Tom Crown did have some funds on there. I'm not sure the state of them, but
if I recall, he got most of it out.
Yeah, I'd used another one. So the interesting part of this, though, the more interesting part is someone had took that data, aggregated it, and made a website called CelsiusNetworth.com. You be careful. I don't know much about the website. Have your antivirus up just in case. Don't connect anything, but it does have a list of what they call the leaderboard, and these are the people who lost the most money from Celsius, and it actually has real names on here, at least for the top 10. Number one, I'm gonna ask you guys to guess how much the number one guy lost at Celsius.
Well, I've looked at it, so I'm going to count myself out.
10 mil.
Not bad. But the entire...
Let me go 100 mil.
Wow. That would be
wild. $1.
So the entire top 10 is actually over 10 mil. Number one, some Jacob Benjamin Fite, $40 million. Second appears to be perhaps a Hirokado Koji, I'm assuming Japanese, 38 million. So yeah, I don't know. I guess you can look yourself up. You can try. I guess they had legal names on there. I guess it's possible, right? When you make an account, you probably had a KYC. So yeah, feel free to check it out. I'll post a link actually into Discord and Reddit. I don't know how much use it is of to you, but at least you know what information they have on you. It's like every day. I know we complain about this many times in the past, but these data leaks from everyone, and it's like there's never punishment for it. Like, hey, sorry, I leaked like your home address, your banking account information, like everything about you, and they never get in trouble. You never hear about anyone getting...
Amen. And this is something I want, like, I could see the future with DAOs and smart contracts and stuff. And I hope this is the way the DeFi world moves in the future when people jump into new projects. Have the people that are starting it up, have them lock their own funds up. And if certain conditions are met or happen, you get to liquidate their funds. And the money that they get from the project and things like that, like a percentage of it gets released for them to for their day-to-day lives and stuff, but it also gets locked up and released over time and at certain like victory thresholds and things like that. Like, there's a lot of awesome stuff we can do with these things, and accountability is one of them. If you're trusting someone with this much responsibility, have it set up so that they can actually be held accountable, at least in part. Like we've just watched too many people broad daylight walk away. Nothing happens.
Yeah, and it's something that the crypto space can help with. There are a lot of different efforts to actually manage sensitive information like that. One of the complaints for DeFi is also KYC or like doxing of the project founders, right? And same for NFTs. Some people feel more comfortable with that. And I know there's even some solutions out there that like anonymously dox someone, and you get like a certificate. And then I guess if there's like a legal summons, from a lawyer or from the police, then they can release that information to them. If, for example, if those people end up rugging the project later or hacking it somehow or something like that. That's just an early stage of what's probably possible within, Web3 I would love to see some innovation come out of it though that helps, because I feel like in the past 10 years, me and probably the average Americans probably had their information leaked by some random massive company. Like
dude,
5 times, 10
leak.
times.
Like the Ledger hardware wallet leak. You know?
Oh, yeah.
I've seen people on Twitter think about combining the Celsius leak and the Ledger leak, and they will get even more info.
Oh my! It makes me so angry that kind of thing can happen. And that's the way it is. And this is why, like, I'm waiting for. I want to connect my wallet. Like, if I have to sign up and give you my information, I'm done with your service. I want just to get to the marketplace to where I can connect a wallet or whatever. And you can have multiple wallets. Some you keep more secure than others and more careful. Yada yada. But I don't. I'm tired of being someone's data cow to be milked and eventually betrayed.
Well, and keep in mind too that there are a few entities out there that are actively that their work is analyzing the blockchain, trying to identify people, trying to identify trends, trying to monitor the movement of funds across it. Like, basically call them like blockchain intelligence.
No, absolutely. I've worked in places and seen these things to where you can look at the chain and you see addresses and names. Like, it is like, depending on the chain, some are more secure than others, but do not think for a moment that you got privacy on a lot of these chains, unless you're jumping through significant hoops and are very competent of the risks and what's going on.
Mm-hmm.
Yeah, I think that the biggest thing for the Celsius leak is, I think the biggest thing is how many people lost a very, significant amount of money, and it's just gone. And I think that this data leak is probably less important to the vast majority of the users, but hopefully it will convert a few more folks to learn about self-custody and counterparty risks and other things that crypto nerds think about.
Yeah. Well, it's salt in the wound. I'm sorry for the people that lost everything.
Mm-hmm. Speaking of losing everything, this is just a random side note. I was playing around on TradingView, and they have a kind of screener that you can just filter a large list of different data points for various markets. And I filtered, they have one data point that's like technical indicator, and it just says like buy or sell. And their strongest buy this morning was something called like Do Kwon Inu. I see that kind of stuff, man, and I just think, like, man, this is why we can't have nice things. Come on. But that there's some kid out there that's like found that page on TradingView, sorts it, and is like, oh man, Do Kwon Inu. That's retirement funds right there. Let me just go in 100%.
Oh, sorry guys, I'll be right back. I'm gonna open up a short on Do Kwon Inu.
Yeah, I didn't even open the chart. Who knows? Hey, so one of the posts this past week, I know a couple of you, like Jay Winterm, Jared, I think you guys were in crypto fairly early, but were you in early enough to get 1,300 Bitcoin for $1?
I could have, but I had made poor choices.
Yeah, sadly, I did not do that. Maybe I could have, but I did not either.
It is a special place to be. And I know at this point, a lot of people can share this feeling and thought to be like, if I had made just slightly different choices, I would never, ever have to work again and have an obscene amount of wealth,
I bet that's most people listening, right? I feel like a lot of people have that, and a lot of people get too greedy when they see those numbers and they don't sell. That's a very common issue.
Shoulda, woulda, coulda. Shoulda, woulda, coulda.
Well, shoulda, woulda, coulda, and you can lose out on even more opportunity if you let that mess you up and make bad plays.
Yeah. A lot of regret in this space. Don't dwell on it, because I've got much more joy and satisfaction. Yeah, absolutely. Exactly. You gotta have fun in the space, man. Something I didn't think, honestly, for all the crap that some people give BSC for hosting an inordinate amount of scammy rug pull type projects, which I believe is really just a reflection of the fact that they are a really cheap chain to use versus Ethereum, right? I didn't expect to see BSC hacked though, like it was this past week. Like that was a big hack. Did you guys follow the news? Did you see that?
Yes, saw that. Given that it's a bridge, and I've just heard so much critical, basically so much criticism of the bridge methodology that like that's the bad way to go about things, and it exposes itself to so much. The surface area is so great for attack that it's a bad idea.
It's not clear how much money they really lost after they. I don't know if there was any rollback, but they paused the chain at least, right? And I think it is. I mean, it's just another story, in a long list of stories that includes Axie Infinity and Solana, where these people are getting hacked for tens to hundreds of millions of dollars through some either. It seems like generally a technical flaw, but it's a technical flaw because these things are like centralized clearinghouses. That maybe that technical flaw in nominally open source software doesn't get the amount of review that it would for a layer one blockchain or something that's exposed to all users immediately. It's crazy that, and they keep getting bigger and bigger. Like if this was truly for $500 million, that's just insane.
Yeah, that's up there with Axie Infinity for sure.
Most often it is bridges that are getting compromised, right?
Yeah, it seems like every bridge gets compromised at this point. I will never provide, me personally, I would never provide liquidity to a bridge.
I think even the Harmony One, I think even that Harmony One hack came back to some bridge exploit, basically.
Yep. Yeah, it's a shame too. I mean, the bridges are really essential to making the space work. Right now, there's not really a more eloquent way to move funds across the different chains, other than perhaps maybe you send it to a centralized exchange or something, and then let them do it however they do it. But I mean, I use bridges all the time, but yeah, I mean, it's really the people that leave the liquidity on there to enable those bridges to work that really get hit hard by this.
Yeah, I guess.
Yeah, it's so ironic too, right? Because what we're trying to do is decentralize all these systems, and at the end of the day, it keeps coming back to this one centralized point of failure, right? These bridges, whether it's the risk of exploit or the risk of multi-sigs controlling the bridge, and the multi-sig getting compromised somehow. It just seems like maybe we're still, because it's early, right, that these bridge solutions are a bit necessary for kind of cross-chainness. But I think the space is moving towards going away from bridge solutions and being able to communicate between chains more effectively and securely. But yeah, it's just another sign of growing pains, in my opinion.
Well, now there's Thorchain, and I haven't looked too nitty gritty into the details of that. Is that essentially like a mega bridge of many chains?
I believe Thorchain runs using the Cosmos SDK or IDK or whatever they call it, and Binance right now is blaming Cosmos code for this bridge hack. So maybe that are reevaluating. I mean, I'm sure they corrected it right away, but yeah, I think Thorchain basically uses Cosmos, and Binance is blaming Cosmos for the hack right now.
Interesting.
Sorry if this is too much of a technical rabbit hole. We can always come back to this or whatever. But I've never quite understood why you can't get around the bridge problem to lock up an asset on one chain and represent it on another, and essentially have a wrapped of a kind of coin without a.
I mean that's what wrapped BTC is. It's wrapped by some company in San Francisco, Coinbit or CoinGo, or I don't know. I forget the name of the company, but I mean, people deposit Bitcoin and they issue WBTC on the Ethereum blockchain. Yeah, so that is one approach for sure.
Yeah, but in that case, you have a point of failure, like this entity to do their job.
Yes, right? Sure. Yeah, I mean, you're relying on some trusted third party to mediate that, right? There is, I mean, there's tech demonstrations going back several years now to do cross-chain atomic swaps, like Bitcoin and Lightning. That can be done via the Lightning network or Layer 1. I know there's implementations that are being worked on, especially for Monero. Like there's a Ethereum Monero atomic swap, but I guess the issue with these kind of totally trustless solutions is liquidity and user experience and things like that.
That makes sense. Okay, cool. Thank you so much. Yeah.
Yeah, I think a lot of people use Cosmos, actually. It's you don't always hear about it because it's not really like in your face front end kind of thing, but quite a few. And you know, a lot of it's going to come down to having an agreed upon kind of data standard for transacting across multiple chains. I think in some ways the Ethereum ecosystem has a little bit of a lead there because they have a robust layer 2 and because a lot of the top competing chains use that Ethereum model, that EVM model as well. And I would speculate, I've said it before, but I would speculate that Cosmos is going to continue to be a market leader in that cross-chain, interchain technology. But we'll see. That's there's a few.
So here comes my question. So, do you think fewer bridges would be more beneficial to avoid these kinds of exploits?
Well, the problem with some of the chains is that the audiences for certain chains, you know, like for example, I think this was like the core BSC chain. So it was going to be very much focused on BSC projects. And, you know, that bridge may not, let's say it was sponsored in some part by Binance, I'm guessing. It probably would be lacking a lot of things that maybe, say, Cardano users or Tezos users or whoever, you know, some other users may want. And, yeah, I guess you'd have to find a bridge that all parties would be willing to participate in, right?
Yes.
This would be the challenge in this space sometimes, is just getting the competing camps to sit down and work together.
Well, and there are shared interests. I think there's absolutely a market and a place and a dire necessity for crypto as an industry to work together.
Yeah, there should be an incentive. It seems like there are certain topics we do come together on, but there's just as many that kind of separate everyone.
Yeah, but I think we have more that unites us, and there's an obscene amount of value potential for us, you know, to work together personally.
Yeah, I hope so for the future of the space. The day that Ethereum and Bitcoin maxis become best friends, that's when we know we've hit peak crypto. We've made it.
Well, that's what you have to have happen there is that the definition of a maxi kind of gets redefined a bit to where, and I'm starting to see it happen to where some Bitcoin OGs are getting tired of the maxis and starting to like criticize them, thankfully, internally, and be like, calm down, you're not helping.
I have seen a lot, well, not a lot, but I've seen a handful of very well-known analysts, engineers, influencers, whatever you want to call them, that were formerly of the only Bitcoin camp, that this bear market have expanded into other things, usually Ethereum, and relaxed their stance a little bit. So that's progress. I think it's a step in the right direction. So there's the comment, someone posted onto Reddit over the past week that at one point stocks were more volatile than crypto. And I mean, you just got to look at the Bitcoin chart and you can see it. Honestly, Bitcoin hasn't really done much for months, right? What was it, mid-June when we had that big dump, when everything looked like it was going to die? And we did have that little rally to like, 24, 25K. But since then, I think the market has been, and I can even look it up, it's been ranging in between like the upper teens and lower 20s for 3 months. Does that sound right? 3 or 4 months? Compared to stocks.
Right. And I think that, I think that's a good thing, right? Like, you know, that reinforces the safe haven narrative for Bitcoin. And it's certainly, I think it's a good look for the the correlation that Bitcoin is having with gold, right? And the correlation is getting a little bit tighter, and so between that and the volatility between Bitcoin and stocks, I think is it's starting to shape up into that safe haven narrative. And God forbid, hey, maybe do we get to start to realize that the narrative of Bitcoin being kind of a hedge against inflation? That would be a great thing. But yeah,
Yeah.
it kind of goes back to the poor, boring price action, and to be that safe haven asset, you kind of do have to be boring.
Yeah, since the dump in June, if you were to look, so I have one of my calendar or one of my charts. It's on higher time frame, 2 months. The 2 month candles, the 2 month candles right now for the past two candles are almost non-existent. The bodies are almost non-existent. It's almost flat. It shows like a 4% range between open and close on both candles. That's kind of indicative of how boring things have been. But I agree with you. I do think it's a good thing. I'm it shows that there's demand in this range, right? Well, we might see equities continue to sell off. We might see more volatility on that side. To see crypto at a much smaller market cap be relatively steady for months now is a bigger deal than I think most people realize.
Yeah, I think it has been since about June 1st or June 4th. It dumped and it's been ranging right around 20K since then. It creeped up to like 24 in August. But I mean, it's like kind of typical, bear market type behavior. Things, volatility goes down, interest goes down. Generally, volume goes down, but actually, I think, total volume across exchanges has stayed pretty healthy, which is indicative of some actual demand, I think. It looks, the chart kind of looks similar to there was like a blow off top in the end of 2017, early 2018, and then actually from like June 2018 until November 2018, price kind of mostly ranged in like the mid 6,000, around 6,500, and it was pretty flat until November, and then it cliff dived down to like 3K. So we'll see. We have one more month until November. I mean, it does seem like, it's flat, volatility's down, volume staying up. So hopefully the move will be to the upside, but it does seem like we're going to be due for a move here in a month or two.
Yeah, it's going to be a big move. This is just, people like to use the words coiling up. That's what it feels like it's doing. It's coiling up for a big move. And we're all going to hope that move is to the upside, because historically, I think if you were to look at this chart, that's what would make more sense, but can't rule out the downside. It's still a scary macro out there, especially going into winter.
Yeah, I think it's much more dependent on external factors than anything that's gonna. I mean, there could be like some crazy good news for Bitcoin, and all of a sudden you can use Bitcoin to pay in every store around the world or whatever. But I think it's largely dependent on how things in Ukraine play out and markets in equity markets in the U.S. and Europe play out as well.
Yeah, I agree 100%. If it wasn't for the macro at this point in the cycle, my confidence would have been extremely high that we would be seeing a reversal either already or soon. Not even a strong reversal, but just a gentle accumulation to the upside, just to show that the floor is in and people are interested. But in this macro, it's really hard to say that anything is going to matter except for everything you just said, right? There's some very big and important things happening around the world that will directly impact risk assets, and we're a risk asset. So let me see, what was next in our agenda? I was just looking at the note. I saw Buddha said my voice sounds good. I got that pop filter. Must have me channeling some Tom Crown here. Where did I? Okay. And oh yeah, this one, how did we not talk about this earlier? On the Celsius topic, it showed very likely or not very likely, we'll say possibly, potentially, that some of the executives cashed out millions, perhaps even tens of millions of dollars before bankruptcy, including the CEO's wife. How does that make you guys feel? Happy?
It's totally possible.
Yeah.
Totally possible, and it makes me wonder: like, are there criminal implications here, right? Related to fraud and just kind of the information they had as insiders, and it just makes me personally really angry because, again, we talk a lot about how Celsius wasn't ever truly decentralized. It certainly wasn't DeFi. And so it's not really, crypto. It doesn't really adhere to the ethos of crypto, at least. But at the end of the day, I mean, their actions continue to just surprise us to the wrong side, right? They continue to show how they were not just bad actors with holding people's funds, but also disingenuous as to what their mission was. And yeah, go ahead.
Sorry, I remember seeing somebody's take on this, and they were talking about how Mashinsky at this, I forget the source of the evidence they had, but while he's saying like, funds are safe, everything's all good, no problem, he's cashing out like at first 100,000, and then like a couple weeks later, like $10 million worth of coins and stuff, or pulling it off the exchange. While he's out in the media and with people, this was back in March, I want to say, telling everybody like, nah, it's all good, everything's fine. Blah.
And meanwhile, his wife is dancing on roller skates on top of their dining room table in their ultra lux, high rise apartment. Right? It's really that not caring. They just don't
Yuck.
give an F. Right? And that's just so bad to see.
Well, and now I absolutely agree. Like, shame on them. These are terrible folks. For what they, assuming these accusations, which it looks like there's some stuff to back it up. But also, like, it's got to be everybody that enabled this, that threw money into it. Like, start looking at these things. Like, if people don't throw money at it, these terrible people can't do these things and get away with them. Look at their structure, look at their situation, and say, okay, how can I actually hold you accountable if you do something naughty?
Yeah, I don't have anything to add except I'm not shocked at all. I'm shocked like Pikachu.
Nice one. I gotta use that with the wife sometime.
Wow.
All right, no Pokemon impressions, please. So I was just looking in the comments here on the live stream, and there's a gentleman on there who has 69,000. I'm actually 69,400. We're just going to assume 420,000, 69,420 moons. What the heck? It's like a moon whale in here, man. I think I got about 30. If anyone wants them, can have them. All right, where'd I go? I actually had a good one. Oh yeah, this one. This is great. This is actually a really good topic for peak bear market. Over 12,000 cryptocurrencies have 1 month of no trading volume in 2022. 12,000. I mean, man, that's a lot. That's a lot of like projects that someone spent at least 20 minutes making, right?
Well said.
Well, I mean, that stat is really striking because of that 12,000 number, right? But I mean, if we think about where we are in terms of the adoption curve, and we mix, if we draw any similarities to the internet, right? The .com bubble bursting, we saw a similar thing, right? Just a wasteland of .com companies that just really didn't have any kind of model, right? And they were just riding on the .com that they were able to buy. And so for me, I think it makes a lot of sense. I'm not taking that as any kind of like drastic signal that the space is dead or anything. And I really don't think anybody else should be. But I think that's all part of the natural progression of just the cycles that we're in, right? Every time you have a boom, you need to have that consolidation, right? To weed out the weaker players and make sure that whether the consolidation is the weaker players joining forces and becoming stronger, the bigger guys buying up the smaller guys, or straight up just the weakest dying off. I think it's part of the natural progression of where we are. And if we make that similarity back to the adoption curve of the web, the internet, I think we're right on track, to be honest, right? And so for me, it doesn't really surprise me that numbers are really big. But I mean, did you really expect any different?
No, it is healthy. It is part of the cycle. And when you reference the .com bubble, that's perfect and perfect analogy for where we are within crypto. A lot of these shitcoin, pardon the language, a lot of these shitcoins and meme coins that don't really have anything other than just copying and pasting and, you know, another project in the space and maybe a healthy marketing budget. The bear market's going to kill them off. And, you know, I was looking at the .com, even the strong contenders, like the ones we see today, like Amazon or Cisco, those got hammered. Cisco now is probably one of the larger engineering firms in the world, but back during the .com bust, it lost 80% of its stock value. Amazon as well. Amazon got just nuked. And that really goes to show you that, you know, even great ideas, even good ideas are going to struggle right now. And maybe there's a bit of resilience, though, that comes out of building into this kind of market as well.
Yeah, and I think that's a great comparison to Cisco and Amazon and all these big blue chip Fortune 500 public companies now that really were building in that downtime. And so I think that just kind of goes to show, like, when we talk about the crypto space and you want to look for those projects that are building in a bear market, it's not just crypto speak. It's not just crypto Twitter that's talking about building in a bear market. In all markets, whenever you have these players that are still committed, and if they are blessed enough to have the runway to continue to build through the tough times, those are the projects that make it. Those are the companies that ultimately find success, right? And sure, they don't all make it to massive success, but along the way, you know, you find little wins here and there. There may be acquisitions, right? It's all a part of that consolidation phase.
As someone working on a company right now, I totally agree with Mr. Mister. But I wanted to just kind of turn it back a little bit and just say the headline number of 12,000, I don't think is really a surprise. And I think you just have to look at it in the context of cryptocurrency as a whole is getting bigger and bigger, right? More and more people around the world who use it. And as we've gone through these cycles, like in 2014, if you wanted to launch your own shitcoin, then you needed to like fork the Bitcoin code base and actually modify things in the code and compile. And it was a higher barrier to entry, still a low barrier to entry, but I mean, it required a lot more. And then, you know, we get to 2017, 2018, and everything is an ERC20. It all ran on Ethereum for the most part in terms of like clone coin trash tokens. And now, you know, within the last couple of years, it's like that same technology has been made easier to deploy. You really don't need to know anything about coding at this point. And you don't even need to do it on Ethereum. You can do it on these cheap networks like Binance Smart Chain or Avalanche or Polygon or whatever. So I think, you know, the barrier to entry keeps going down while the number of users keeps going up. So I think it makes sense and it's not a surprise.
It makes sense, but to your point, I think that's really interesting that you highlight that fact that it's getting easier, right? And we need that though. And so while the front end user experience, the end user experience isn't that much easier right now, it is getting easier to deploy, like you're saying. It is getting easier to build. And I think that's what we need. Unfortunately, it comes with 12,000 projects being effectively dead right now. But, you know, I think it's healthy. Overall, I think that's a healthy stat.
Hey, we know one project.
I agree as well.
There's one project that's not dead, gents. That is Do Kwon Inu.
Short.
Yeah, please don't buy that because we said that happened with the cat coin thing. And, well, I guess some people made money on that, but I just don't want to be the cause of people's financial ruin. Getting financially ruined by Do Kwon twice in 1 year would be terrible. All right.
I'm searching it right now.
Looking at one more thing on the .com, I remember seeing some comments about this, but this part is kind of eerily similar to what we saw, which is between 99 and 2000, they saw 19 .com companies advertise during the Super Bowls, and that kind of preceded the massive sell-off in .com. So who knows? Maybe it's more similar than we think.
It was Matt Damon on the Super Bowl commercial.
Oh, geez.
That's what did it.
Yeah, no, it's Mark Zuckerberg's sister. I forget her name. That video, I'll never forget that.
What a good video.
What do you mean? I have nightmares about that.
And by good, I just mean hilarious.
Yeah. All right. Let's see. What was next on our agenda here? I
think nothing goes.
What's that?
I think nothing goes. I think we discussed everything.
Oh, on the list you have, yes. So, gentlemen, we normally pick topics. We're here at 4:20. What did anyone come with a topic that they wanted to cover?
I was going to mention the Bank of England just doubled the size of the QE, or quantitative easing, which consists of buying bonds.
Interesting.
Yeah.
Yeah, that's a huge red flag, right? While the tightening is going on. Yeah, there's tightening everywhere, and they're going against the grain. That just shows that there may be a lot more trouble behind closed doors than what we may be seeing as, retail, monitoring all these things happening from a retail perspective. Because if they can't manage their monetary policy in any other way but continuing to print, that's just going to make it worse, right? As the pound continues to decline against the dollar, and as debts become due, printing is kind of, on the one hand, going to make it worse, but on the other hand, what are they supposed to do, right? What is that? What are these fiat economies supposed to do but print their way out of having to pay back their debt? And I think that speaks to the one thing maybe we haven't spoken to yet, Pat, which is your chart that you posted about federal debts, the trends over time.
Yeah,
and that's not unique to the U.S., right? It is the size of the U.S. government's debt is quite unique. I think, what was it at? It's like double-digit trillions. It's like almost halfway to 100 trillion in debt. Maybe it's like 30 to 40 trillion. But yeah, just looking at how much it's increased in such a short period of time. How do you service that debt, right?
And that is terrifying to think about. I posted about that a few days ago, and I said, hey, it's Halloween time. Here's something to keep you up at night. And for the U.S., just since we'll say since 2010, around 2010, there's a figure that's the debt to gross domestic product. Gross domestic product effectively being the amount of money a nation makes in a year or outputs in a year. That ratio of debt to GDP was only around 64% back in 2010. And in the 12 years since then, we went from that 62% to 166%. It's basically parabolic. The American debt is just going parabolic. And
it really is.
There's not a good answer for how they could fix that, because you just get to a point where it becomes too burdensome. I mean, yeah, they could print their way out, but at the same time, they're diluting the value of the currency they're paying their way out with. So,
where's the accountability for that?
Or it goes to zero.
If anything goes to zero, where is the accountability, though? Right? Because if you think about where the sovereign debt is relative to the various GDPs around the world, right? The debt to GDP ratios of various countries around the world. If you look at that from an individual debtor's perspective, like let's say that you are trying to go buy a house and you go and show the bank that you have debts that are and that you've accrued debts of 160% of your yearly salary in just 1 year, what would the bank say? They'd be like, no way, you are a huge risk. You are a bad actor. You do not deserve to participate. And yet that same metric and that same way of looking at the financial system is just not there. And a lot of people might say, well, hey, it's the free market, and the free market will make the necessary changes and corrections that are needed to keep this thing going. And to that, what I worry is it's not actually a free market, because you do have the regulators. There are things that they do well, but for the most part, right, the free market argument completely breaks down. So it's this kind of like side talking out of both sides of your mouth that keeps on happening, where people keep saying the free market should dictate, and yet when push comes to shove and there needs to be accountability, the free market all of a sudden is no longer a thought, and regulation comes in, right? And policies come in.
Well, and as usual, the free market is getting blamed for the actions of the opposite of the free market. And there's a reason that people are susceptible. People in society are so very susceptible to scams because it's based on a scam. Fiat is flat out a scam. Is a bad idea. I understand people can have good intentions going into it, and it can seem like a good idea that can work for nation states and stuff like that. Absolutely not. It cannot in the long term. It was born to die. And historically, this has happened since 5000 BC, from the very first Babylonian fiats.
I will offer a slightly more mainstream view, and that is the last time the debt to GDP ratio was this high was 1946. So coming out of World War II, it was 121%, which is on the order of what it is right now. And we are basically at war right now with Russia. So I think, and coming on the heels of COVID as well, right? So those were huge kind of money printing events, and we'll see how the next, 5 to 10 years.
Did Congress announce we were actually at war?
No, but we are.
I mean, take your pick, right? War on crypto, war on China, war on Russia, war
on
COVID, right?
Well, and real quick,
there really is a Cold War. I mean, we are basically a Cold War with China as well.
Well, no, like the U.S. is the modern empire. It's at war with everyone and everything. It's the world police kind of thing. But yeah. But okay, so when you're talking about that GDP ratio, though, how many times over the years has that metric been meddled with over the years? That they've changed. Oh, we're including this. We're not including this. We're altering this. Don't consider that. Like, we say GDP, but
I don't know, because if you look on Fred, the federal data website, it only goes back to 1970. So you have to go to, I'm looking at like longtermtrends.net to see a chart back to the 1800s. So I really have no idea.
And we don't know their methodology.
Right. And I think that's to your point, Jared, is this data that you're seeing on Fred is going back to 1970. But at certain points along the way in those charts, right, the metrics that are used to calculate those different dots, they changed along the way, but retroactively, they don't go back and change those numbers. They just change the way they're calculating them going forward. So if you're a statistician, how can you make any sort of statistical analysis when the way you calculate your new set of data is so vastly different from historical data? That just blows my mind.
It is. It's the great global rug pull.
So I will say that the chart that I posted in, just for everyone's essay, the way they measure the previous debt to GDP ratios was using 2022 data. So like the value of a dollar today is how they measured that back then. So they did at least in this one, they update the data year to year with whatever the current values are. But even then, it still looks terrible. I mean, it's going parabolic. The Dixie's going parabolic. I mean, something's gonna bust. It's none of this is healthy.
Well, it's like just existentially, like this just can't keep continuing. Like that real value is not just being magicked into existence when people magic money into existence, and like that there will be like reality will reassert itself.
Yeah, but I do agree with Jay Winterm that there are extenuating factors that definitely impact this. I don't think those are the only factors, but you have to take them into consideration, and there may not be a lot of alleviation of these pressures until, you know, de-escalation in Ukraine or inflation comes down.
I don't know. Like to me, it's like, okay, so they've messed up the economy. It's awfully convenient that there's these extenuating factors that happen to boil over at the moment. I don't.
Yeah,
you know.
Yeah. There's always. I mean, you can always look at it from a few different angles. Like, for example, the .com bust. You had 9/11 towards the end of that.
Yep.
And if you look at the articles about, you know, the research done on the .com bubble, that is one of the factors that they do attribute things to.
Where like the Pentagon just lost $2 trillion, whoopsie, and then no follow up and accountability.
How did they lose $2 trillion?
I don't know, but look over there. There's something happening.
Hopefully it's not lost. Hopefully they spent it building a moon base on the.
Yeah, I mean, if there's a moon base, that would be awesome. I would gladly give $2 trillion for that.
You could mine helium-3.
Yeah, or maybe like a time machine or something. So I think it's time for the Q&A, gents. Our favorite part. So I'm gonna go.
Well, Pop, before we go on to there real quick, did you want to follow up on the Proof of Stake Alliance stuff? Because we brought that up a bit last week.
Yeah, please. Let's get that update. We were talking about that.
And this is something I could ramble on. So I'm gonna do, you know, bullet points, and then you guys can hit me up, or I can follow up a little bit here and there over future episodes. And I'm trying to get some of the members of the Proof of Stake Alliance on the show. So that'd be cool, because I think going forward, especially in the industry, proof of stake isn't going away. It's going to get bigger. And like we were talking about earlier, we have to get, as an industry, working together. And on that note, the Proof of Stake Alliance is a great precedent for doing this, because there's several blockchains that have come together to help back up the Proof of Stake Alliance, and they're working together on this. And it's just like, I even myself, I had no idea. You've got like Tezos, Cosmos, I think Polkadot, Ava Labs. Like there's a lot of blockchains helping out with this. So that's a cool precedent. Anyways, okay. So for those that aren't familiar, what is the Proof of Stake Alliance? Proof of Stake Alliance is an action-oriented nonprofit industry alliance advocating for forward-thinking public policies that foster innovation in rapidly growing sustainable multi-billion-dollar proof of stake ecosystems. And it focuses on 3 areas: taxation, securities, potential issues, financial integrity, money transmission laws. And it started back in 2019. There's a gentleman named Evan Weiss and others. Evan Weiss was attorney back then. I think he's still practicing as one. I think he also works in Coinbase Cloud Department currently. Oh, yeah, and just real quick, any errors in what I report here is all on me. I may... don't blame my sources or whoever I reference. It's totally my fault if I get something wrong here. And so, yeah, started back in 2019, and they were getting interested in proof of stake more and more, and said, like, there's some new regulatory questions that have come to the forefront with this. And with that idea, the Proof of Stake Alliance was formed back then. And then I've got a list of like things they've done historically over the years, back every couple months you see an update. So this is an active organization. It's not something dead in the water. Their latest update was October 3rd, where, you know, a court grants motion to dismiss. Proof of Stake Alliance supports Jarrett's appeal in pursuit of clarity for all stakers. So what's the argument they're making, and what's the problem they're addressing? It's that traditionally, okay, so back in 2014, the IRS gave guidance on what to do about like mining and stuff like that. It wasn't taking into consideration staking as much, as it wasn't as popular. And basically what they said was, when you get your coins, you are that is income. And given the way proof of stake works, the Proof of Stake Alliance and the lawyers and all that are using the argument that, based on historic precedent, actually, that's not the way it should be handled with proof of stake. And so let me give you the argument in a nutshell. Stakers are providing maintenance to the network and getting tokens for that, though they are not being paid to do it. And it is not income, because they are creating the tokens, and created property is not income. So a couple bullet points on that. Let's see. Yeah, for the newer proof of stake technology, this would create a compliance nightmare and punitive overtaxation if you just act on the IRS guidance. And of incredible note, which the lawyers point out, that 2014 IRS guidance is just guidance. It is not law. The IRS cannot just create law. Let's see. Yeah, income under such a policy would overstate taxpayers' actual economic gain significantly, in many cases resulting in demonstrable systemic overtaxation. The overtaxation is equivalent to taxing a 20-for-1 stock split by counting the new share, that is the 21st share, the value of an old share as taxable income. Like any property, cryptocurrency tokens can indeed be income when received as payment or as compensation. But new property, that's created property, is discovered by a taxpayer, not received as payment or compensation for something else. It is never income and never has been. Cattle, corn, gold, widgets, wild truffles, artworks, novels. Think of any new property created or discovered by the taxpayer. It's no one else's expense, and it's not income until sold. So you're not evading taxes, which you are creating value. You're creating a property, and that should not be taxable. And this is a historic case, not only in the U.S. but around the world legally. Let's see. And as a factual matter, new reward tokens are indeed created by stakers. Understanding how tokens are created is complicated, resorting to flawed financial analogies is easy. So even in our own language, we say like, I'm getting a yield, I'm getting a return, and things like that. And that when regulators hear that, understandably, they think in income terms. But so that's kind of on us in the way we've been describing these things. But that's not actually what's happening technically. Block rewards are nothing like stock dividends. They are not compensation for services. Try to imagine taxable compensation that doesn't come from another person. Reward tokens cannot be taxed as immediate income under Section 61 of the Internal Revenue Code, but not to worry, they will be fairly taxed when sold. Policy problems remain for cryptocurrency taxation. Fortunately, new reward tokens are not among them. So basically the case that Proof of Stake Alliance is making is like, no, we've got obscene amounts of precedent for this. This isn't much of a question at all. We just got to shine the light on it. And let's see, a lot of this is just redundant. But yeah, okay, questions. What do you guys think? I think this is awesome. Not just in getting this error corrected, because it absolutely does make sense. And I've been staking for years, and it is obscenely burdensome to have this regular tax event happen just because you're getting these coins back.
I would say for the listeners, what's the TLDR for this?
TLDR. Okay, cool. The Proof of Stake Alliance is working to get it corrected in U.S. tax law, which will help with the rest of the world. Basically, currently, staking is not the way staking is treated as income, and it shouldn't be. And there is a great effort to get that corrected, and it looks like everything's on their side. And if we look at the case that's been going on, they've been winning. The IRS has been trying to settle, and the gentleman we found who was part of the Tezos community, Josh Jarrett, has pushed it every step of the way. And he's like, nope, not settling. I'm pushing this to get the principal taken care of and corrected. I'm not just going to take the payout.
That's so awesome, and more power to him, because what he's fighting for is to set precedent, right? That
Amen.
The books that they have, that they can lean on in the back in retro. So fully support that guy. What's his name?
Josh Jarrett. You can find him on Twitter. What is his name? No Hard Forks. That's his name on Twitter. Awesome dude.
Love that guy right now. Awesome
yes.
Dude.
All right. Well, that's good news. Looking at the questions, we do have one that I think is easy. Someone asked, what is a bridge? And a bridge basically is just a platform that lets you sends coins or tokens from one chain to the other. They may or may not be in a wrapped form. So for example, if you wanted to send, something from Ethereum chain to Binance Smart Chain, you would use a bridge to do that because they're different underlying technology chains. It's kind of like a different operating system. It's like sending a file from an Apple to a PC. Let's see. And I'm just going through on the Reddit side. So feel free if you gentlemen see anything on the Discord side. Okay. His comment, I like the comment from Thomas G. Wins, which is through this bear market, we want to see people understanding the actual value of crypto. And I agree. We got a lot of great exposure during 2020 to 2021. Now it's the time to really show the use case, the utility, the value, and ensure that going into the next cycle, it's a meaningful cycle. It's not just, there was a lot of garbage, a lot of hype, and a lot of just useless projects in the past couple of years. And we have to rise above that to see any real adoption. What are our thoughts on XRP, gentlemen? Do you have any thoughts on that?
Like initially, I always joked about XRP and like talked about the missing 30,000 blocks they have. They kind of got, I don't know whatever got done about that. I never entirely understood the way the project was supposed to work. Never got too interested in it because it seemed like it was a pretty centralized situation. But again, I don't know. And but over the years, also, it is one of those projects that has stuck around from the very, very early days. So there's definitely some credibility to go with that. And from what I do understand of the project, it does seem like kind of a novel idea that could that could help with a lot of economic issues, because it's from my understanding, essentially you're creating these value gateways and some kind of like a reputation network amongst people. And so there's kind of a way to represent any asset, even physical and stuff like that. And, so there's some interesting stuff there, but it's also kind of complicated. And there's a weird history behind it. So personally, I've never gotten super invested in XRP, but I've also seen the fight they've been putting up with the SEC, and I will absolutely respect that and appreciate that.
Yeah, I tend to agree with Jared that I'm not a fan of the project. The only XRP I ever owned was back in like 2014. You used to be able to quote unquote mine Ripple by computing on Boink, which is like the Berkeley Distributed Computing Project. And so I would like mine on old tablets and shit and get Ripple and dump it on Kraken for Bitcoin. But I don't like the project. I don't think it adds a lot of value, but I am certainly rooting for them to win their case against the SEC, if for no other reason than to just, provide clarity in a way that is, beneficial to people who want to issue tokens to back their company. I mean, Ripple's basically a company that issued a token as like they were kind of not exactly the first ICO, but kind of they were like the first ICO.
Yeah,
there was one in 2013 called Next and NXT, and it had like 60 participants on Bitcoin Talk, and they raised a total of like a few $1,000s or something. So like Ripple is older than them, and I mean they weren't selling. They were, they've been selling XRP the whole time they've been in existence, right? So selling it, giving it away to get people invested, et cetera, et cetera. So I think that the precedent that this case sets will be pretty important, and I hope that it comes down in a favorable way to people who want to capitalize their company and their idea without having to worry about the SEC coming after them later on.
Hear, hear.
Hear, hear.
So I saw while we were doing the podcast, or maybe right before we started, there was a news headline that says the U.S. Federal Reserve to post its first operating loss for the first time in over a decade. I don't even know how that works. Aren't they the ones that make the money?
How does that work?
Well, it is a private institution that a lot of people don't know. The Federal Reserve.
Maybe it's time for these guys to take a salary cut. Just saying.
Yeah. Yeah.
See, in crypto, we could do that. We could lock up a lot of their assets.
I'm just going to pretend that's bullish. We'll just say it's bullish because I honestly don't even know.
When trad economy, when the legacy economy, shows its has its hiccups. In my opinion, that's good for crypto.
Yeah,
still
true.
Fed bankruptcy.
Did you just do an office quote?
Did I? Okay, let's just say I did.
Michael Scott. Yeah, for those who haven't watched The Office, if you're too young, you didn't catch it back in like the mid 2000s, highly recommend it. I mean, it's so memeable. You've probably seen it around, but the show is honestly great. But there's one where the boss, I forget why, but he's like, I declare bankruptcy. And he thought that was good enough. Yeah. Let's see. How do people, you know what, Jay Winterm, since I have you here, I'm going to corner you on this. Someone's asking, how do people get so many moons? Besides just being here for a long time, what's the trick?
Some people go and buy them, certainly, which doesn't help you in terms of your voting power, but there's definitely people who just go buy them. Being here for a long time is very helpful because, in the olden days, you would get a lot more moons per upvote when there was less activity on the sub. As more and more people use the subreddit, that kind of dilutes and you get less moons per upvote. In terms of there are people who are earning maximum moons every month, and the most successful strategy at this point right now seems to be making comments on brand new posts early on, and then I guess if you do that enough, you get your comments upvoted and you get more moons at the distribution period. That's, I guess, kind of the different ways that, and you can be a moderator. If you're a moderator, you get a bunch of moons as well, I guess. So those are the various ways you can get moons.
What's the max you can earn in a month?
I think it depends on the distribution. I want to say it's around, I should know, but I think around 5,000 right now. Let me see. What was the last?
Yeah, I put you on the spot. This wasn't planned. I saw a few comments, probably because there was a couple cryptocurrency moons whales in the comments today, and people were curious.
The other way that I didn't mention is if you do cool shit for the subreddit and especially the Moons ecosystem, we will be happy to compensate you in Moons for that work. Like, for instance, I have a friend who runs the tip bot on Discord and the tip bot on Telegram, and he's made some moons over the years, and we now have somebody helping out almost in kind of full-time capacity, as reaching out to exchanges and building some Web3 stuff that people will be able to interact with for Moon. So if you have ideas about something you want to build that you think would be really cool, just message us in ModMail and we can discuss.
Very cool. That's good to know. You guys don't have a bounty board anywhere, do you?
Not at the moment, but that may be something we could, that actually we've talked about having. How could we have a Fiverr for moons or jobs for moons? So that is something we've talked about. So yeah, I mean, that's something that would be a service that's valuable to the ecosystem that maybe we would compensate someone with moons for helping to set up.
Good idea. You guys have a lower circulating supply on moons than ApeCoin. Just putting that out there. I saw that. All right. And back through, do we have any other questions? If you guys see anything, jump in. One person did ask, they asked someone to, so Brainpower 11 asked someone to record this. I do want to give a shout out to Izahe, who said, I got you, fam. That's very cool of you, Izahe. But we do also put this up on all the podcast sites. So links were in the reminder post. And I also posted the Buzzsprout link, which you can go to and listen directly on there or download the files. So there are a lot of places. We're on Apple, we're on Amazon, we're on probably a dozen other sites. Definitely available. Let's see. Okay. I think we've exhausted the Reddit side. A lot of hellos and highs. I just want to say hi to everyone. Thank you. Good morning. All that good stuff. Let's see. And now we're going to the Discord side. So this is an interesting comment that the SEC, excuse me, from Will on the Discord side says the SEC regulation is coming and crypto looks more like an extension of the U.S. banking system. Certainly with the CBDCs, the central bank digital currencies, that will be obviously an extension of the U.S. Economic system, the U.S. Currency. But, gentlemen, have we ever considered a future where banks maybe begin to launch or at least lend support to or endorse DeFi protocols? I know that there's been some minor exchange between some of the big ones, like maybe Aave and Maker and some banks. But could you imagine a future where maybe big national banks or international banks would endorse certain apps or even give their users access to apps? That would...
Yeah, absolutely. And I think it ranges from like projects all the way to infrastructure, right? I was recently at the Chainlink SmartCon conference in New York. And what was interesting there was it wasn't your typical crypto conference. That's, really largely attended by enthusiasts, new project owners, a lot of networking. The crowd there was very much bankers, VCs, and the infrastructure folks, whether it's the folks from the Swift network, right, or even Google. What was interesting there is, yes, what I saw there was all the banks are doing the rounds on these conferences and they're keeping their eye on projects. And I talked to some of them. And for example, and from like Citibank that I spoke with, really, really made it clear, like, hey, it's too early right now. We can't touch any of these, but we would love to. And the reason we can't is there was a laundry list of things. And one of the things that stood out to me was the insurability is not there, right? The insurance market just doesn't accept these highly volatile assets. And so I think that's a major milestone that we're going to have to get to, is institutional grade insurance on these assets and support from maybe the Fed, right? Before the banks start moving in. But they're already making partnerships with Chainlink, right? You look at Swift. Swift is doing a proof of concept with Chainlink, and you look at the work that they're doing with the WEF, the World Economic Forum. So yeah, I can tell you for sure that there is a future where the banks do invest. How long does it take to get there, and what has to happen first? That's the big question.
Yeah, I'm of the same boat that, and I'm curious to understand, like, in what way we would have this kind of integration and what would be going on if it's governments getting involved and like forcing it and like pushing it into a bank crypto relationship, in which case it's, in my opinion, not really crypto anymore. Then that's one thing. But I think barring that, we'll absolutely see wise banks getting on board with crypto and leveraging it.
I like the disclaimer, the wise banks. There you go.
Yes. If they're smart, they'll read the writing on the wall, because this technology will change everything.
As the worlds converge, too, I would be very interested to see how banks respond in terms of their own internal services. Would they... Because right now the reality is most banks don't feel a need to raise rates on any say savings accounts or similar products that they have, because people simply don't demand it. We talked about that last episode, how the millennials and younger never really lived in a world where you had robust, healthy rates for investing in your local national banks. And if they start to enter the DeFi space in some capacity and they see things which aren't so uncommon, like double-digit APR And certainly at least say 2 to 5%, even on stable coins, is very achievable at times. Depends on market conditions. Compared to banks, which are doing less than 1% on average, far less than 1%. I would be really curious to see that world, and maybe that's the kind of thing that's going to take a few years to develop. But that's additional competition for the banks might incentivize them to do better.
I absolutely agree. Absolutely agree. I remember being 14 and in the right investment vehicle, like very safe investment vehicle with a bank, you could get like 10% roughly on your money. And that was like, and just over the years that goes down and down and down. It's unheard of. And so that's not the world we live in. And like, as that changed, I was like, yeah, this isn't really, the traditional banking system really isn't a great option for that and many other reasons.
Mm-hmm. Yeah, that's one of those little tricks I was talking to someone about. I think it was Eamon, for those who know him on the Discord side. I was talking to him about how one of the tricks you can do in DeFi, it's a little bit degen and a little bit risky, but one of the things people do is they sort DeFi protocols by APR, or they stock different protocols looking for something that's about to release, new strategies, new vaults, new whatever. And when they first launch, because there's not many investors invested in them, that APR is really high. And, if you're the first dozen people in there, you're going to make more in that, say, first week than you would, potentially in like a year in another protocol, right? Once you have a lot of investors. So, it's a little trick you can do, but just be safe, never risk more than you can lose. And some of those protocols, they may rug people early on. They may just, do a fake launch, try to sucker a few people in and then take their money. I don't think that's the case most of the time, but it happens. So,
yeah. No, I think that's a great, and actually digging into this whole like legal case with the proof of stake stuff and getting into like the issue of property creation really highlights for me like something a question I've been trying to articulate for a long time when it comes to projects. And it's asking the question. Now I understand the question I'm trying to ask or articulate, and it's, where's the property created and how is the property created? There's that whole game where, if you can't tell that, if you can't figure that out from the problem the thing is solving, then you might be you're the liquidity, you're the, the whole classic Ponzi scheme kind of thing. You're the, you're the income
liquidity.
Yeah, you're the exit liquidity. And so ask that question, like, what's the actual value being brought by this thing? And frankly, I know a lot of people do it. They look at something and they say, oh, yeah, this is going to be a great Ponzi. And if you play that game and you get burnt, I hope you do. You deserve it, because that's how these hazards stick out there in the world and keep burning other people, is people support them.
True. Very true. So, gentlemen, I think we may be at the top of the hour here. I think we've hit all the questions I saw. A lot of good questions. Any parting comments from either of you?
Love you, everybody. We've got a great audience. It's just a great crew.
No, just a happy Monday. Stay safe out there. Let's go Fed bankruptcy.
Yeah, we'll have more information on that next episode. So thank you, everyone. Thanks for sticking around. I really appreciate it. Just trade safely this week and every week. We really want to see you here, this time next year along with us. So
amen. Have a wonderful, wonderful week. 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 Have a wonderful, wonderful week.